I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Good morning, everybody. Welcome to the morning show. Spencer Israel, JC Parets, Steve Strazza. A lot going on this morning. We got charts, more charts. We got some news as well. Some of you don't care about that, but I do. We got some 13F filings. We got some earnings. Our guest today, Frank Cappelleri, sent us over like a dozen charts of his own to talk about. So we're bringing him on in around 8:50. Rip through those. We'll have Kimmy Sokoloff, as always, and Patrick Donawilla from the Chart Report will join us later on in the show. Good morning, everyone in chat. Good morning, Joe, Jerry. Comparison Cooking, new favorite morning show. Surprise, it's not a cooking show based on your name. What up, Christopher Brown? 92 Fish Gut remains my favorite name in the chat. Good morning, all. Let's go. I got Strazza here. I got JC here. Let's go. It's time for the morning show.
What's up, Spencer? Did you file any 13Fs this season or no?
Of course, I file every season.
Do you? Let's just get this out of the way for people who are terrible at math. This guy from the movie, what's the guy? Steve Carell.
So you're just gonna start here?
Yeah, let's just get it out of the way because Steve Carell does not own. Does not short the market.
Christian Bale, man. Christian Bale. Come on.
Christian Bale does not. Is not short $1 billion, $1.6 billion worth of the S&P 500. If you think he is, you should have your head examined. There was a filing suggesting that he once had this position back in June, right? So if you think that he still has that position on today, you're welcome to think that. There's no evidence of that whatsoever.
Even so, when he did have it on, was it not just a hedge?
I'm getting text messages from high school friends, Strazza, about the guy from the movie.
You know, but JC, every 3 months, every 13F season, this is a headline. Like, yeah, they're not even getting creative about this anymore. This is a recycled headline from 5 years ago. We've been doing this for a long time.
Like the debt ceiling. They brought back the debt ceiling. They ran out of like old, scary headlines, so they brought it back. We should bring back the taper. Remember the taper?
The tantrum?
Taper tantrum. Right? Listen, we will discuss certain fund managers, 13F filings, but not many of them. Like we were discussing off air.
Yeah. Right. So anyway, I wanted to address that. The guy from the movie, we don't care. The data is old. And if you think that this is important news, you watch too much news. Respectfully to you, Spencer Israel. All good.
Respect.
I just want to reiterate to everybody that we're halfway done with the third quarter, which is
yeah, we are.
Am I just getting old and just like old people say that, oh wow, it's going so fast, or is it like really moving fast?
Time flies when you're having fun, and bull markets are fun.
I do think that's a middle-aged dad thing to say. Oh wow, it's August already. Can you believe it?
Some bull market, the new highs list peaked a month ago. Some bull market. All right. So speaking of bull markets, shall we discuss the state of the markets? Mr. Spencer Israel, hit it.
Please.
Okay. I messed up.
Well, I wanted to follow up on the conversation yesterday with our internal sentiment composite. And, these sentiment, what does Batnick call them, Strazza? Anecdata?
Because it's anecdotal.
I like that. Did he make that up? I don't think he made that up. He definitely stole that.
They've been very vocal about, being careful with survey data over the years, him and Ben.
Of course, as you should, as we are as well. It's one data point, and price is what pays. Sentiment is just an additional perspective on things. And this particular perspective, we talk about all the time how these sentiment data points are not perfect. There's no one data set that is the best one. In fact, most of them suck. The real value, in my opinion, in my experience, is really aggregating them all together. So that's what we're doing here, taking the individual investors, taking the advisories, taking the active investment managers, the volatility index, put call ratios, and really adding them all up and just presenting the case whether sentiment is providing opportunity or if it is evidence that there is an elevated level of risk in the market. And last summer we were some of the most pessimistic levels of all time, depending on what you're looking at. But definitely opportunity last summer, no question. We went on to have one of the most historic runs ever. Best start to the NASDAQ, best first 6 months for the NASDAQ in history. So sentiment definitely provided that opportunity. Now we're on the other side. Doesn't mean the market needs to crash. It doesn't mean this is 1929 or 1987 or the panic of 1884. You know, it doesn't mean that there's it just means that sentiment is no longer at least in the short term, it's no longer a tailwind. At least in the short term. Bigger picture, I still think that there's a lot of disbelief and a lot of pessimism out there in terms of the structural perspective, thinking out years. But in the near term, certainly a little bit frothy. This adds to the fact of some of the points that we were bringing up yesterday, where Goldman Sachs mentioned that their hedge fund clients were covering their short positions last month at the highest rate that they've seen in years. You've got some of the bearish sell side analysts that just missed the entire thing. Like, imagine being a client of one of these firms and having to listen to these guys and missing one of the greatest runs of all time. Those guys are now being like, oh, you know what? Maybe things aren't so bad after all, right? So little late, but thanks. And the worst ETF, I think, in the history of ETFs just got delisted. It was like a perma bear who didn't realize that you can't be a perma bear in a bull market. That got delisted. Like, all of these things are like mounting on top of each other, suggesting, things have changed, right? We saw those magazine covers yesterday where the child robot. Can we just show that one more time? Because that was a classic. Can we show the child robot there? Slide 41. Child robot riding a bull, racing through the floor of the New York Stock Exchange. You got these adults in suits with big smiles on their faces. Silliness. Do these things come near market lows, or do they come near market tops? And now let's break down the actual price. Here's the New York Stock Exchange FANG index. So these are some of the largest components of the S&P 500. There are even larger weightings in the NASDAQ 100. And last time this index was at these prices, the index got cut in half very quickly, I might add. And when you add up the market capitalization of all of these things, what's the market cap of these FANG index without looking? What is it? 5 trillion? 4 trillion? Ish?
The market cap of the index? I have no idea.
Market cap of the components.
Oh, 5 trillion.
5 trillion, right? That was my guess. 4 or 5 trillion. So nevertheless, in a very short period of time, you had trillions of dollars wiped out. And that happened last time prices were here. So from my perspective, I'm not going to make the bet that we're just going to break out now all of a sudden and just start ripping higher. I need to see it. And maybe it happens this week. I doubt it. Maybe it does. Maybe it happens in a few weeks. Maybe it happens in a few months. Maybe it takes a few quarters. Maybe it never breaks out at all. Right? Now, I don't think that last scenario is the high probability outcome. I actually do think we break out. I just don't know how long it's going to take. And I'm not going to sit around owning mega cap growth waiting for this eventual breakout. Ravi says 7 trillion. I believe it. But yeah, I think it's going to take more than a week. Probably more than a month. I have no idea. But I'm gonna wait and I'm going to see it. And I'm either going to be buying these things a lot cheaper, or I'm going to be buying these things higher on a breakout. I'm not going to own them here. And then let's just revisit the NASDAQ and S&P 500 chart. And I like the word revisit. I'm going to use up my recess here because I'm not going to be around for recess later on in the show. But if you're ever tasting wine, if you're ever in wine country, whether it is in Napa or Sonoma or somewhere else around the world, the word you want to know is, ready? revisit, because when you are drinking wine, let's say you taste 4, 5, 6 different wines, you tell the person there, I would like to revisit that 2018 Cabernet. Excuse me, can I revisit that 2019 Chardonnay, right? You're going to get, so in other words, if you remember that word, revisit, you're going to get more free booze. Revisit. So here we are, revisiting this chart of the NASDAQ and the S&P 500, running into overhead supply, very similar to the New York Stock Exchange FANG index, just reiterating that these mega cap stocks are stuck below overhead supply. I don't know how long it's going to take. My suspicion is going to take longer than most people are willing to bet. And this is coming at a time where it is a seasonally weak period. Throw up the seasonality chart. Stocks are supposed to struggle over the coming months. All of the evidence continues to mount, suggesting that that's exactly what's going to be happening. It's what's been happening. As you can see, the new highs list on the next chart peaked a month ago. So even with the more recent highs that we saw in the indexes a couple of weeks ago, we did not see that confirmation from the new highs list. And then, which leads me to believe that perhaps further sector rotation is necessary. Perhaps the leading sectors and industry groups are going to be some of the ones with lower weightings in the indexes. If interest rates are going higher, I mean, I'm not convinced that they are. The trend is up. Everybody just assumes that they're going to go higher. We'll see. But if rates are going higher, my suspicion is crude oil is going higher too. As you can see, both of these lines look exactly the same, which is why we're long energy stocks. And then finally, here's one for you, Strazza.
Yeah.
Slide 7. I don't know if you saw Meb Faber's tweet yesterday. Don't look. Did you see it? Or no, is this the first time you see it?
Yeah, I see it.
No, but is this the first time you see it?
Yeah.
You didn't see it yesterday. Okay, good. So without looking, rank the following assets by return so far in the 21st century. U.S. stocks, foreign stocks, 10-year bonds, REITs, and gold. Who's the best performer?
Easily U.S. stocks. That's easy.
Nope, not even close. U.S. stocks, foreign stocks, 10-year bonds, REITs, and gold. 21st century. Throw up the return, Spencer.
I knew it was going to be gold. Yeah, all right.
Gold number 1. REITs number 2.
Well, because REITs shouldn't be on the list, right? They're higher beta than the S&P 500, and they're also
are they? No, they're not.
REITs isn't a good read of real estate. I don't like it.
First of all, REITs is not higher beta. REITs has a.
They probably are. Think about
it. It's actually a beta of 1, so it's the same as the S&P. So it's not higher beta. But this also hold on.
Every day, real estate moves more than the broader market.
Hold on. This cherry picks the start of the century, which is right before stocks got clobbered. Right. So keep that in mind. And that also occurred just as gold started a new bull market. So there's a certain element of timing here where you're specifically cherry picking the beginning of the century in a similar way, Strazza, to sort of cherry picking year-to-date returns, because that's when the rotation into growth took place, right? Yeah. So there's a coincidental factor in there as well. So this doesn't tell the whole story, but it was a funny tweet. Shout out Meb Faber. It was a funny tweet because the results are surprising to even someone like yourself who literally does this every
single day. That was a trick question, because the first 10 years of the century were bad for stocks, right? So that was a trick question.
Not so much bad for stocks. I mean, there was times that they were good, times that they were bad. Like they started becoming bad right after this,
right?
And then they had a bull market, and then another crash, right? So, yeah. So choppiness. Yeah. So I thought that was an interesting. Meb Faber, always a thinker, making you think. So shout out. We should have him on the show, Spencer. Reach out to him. Come on. He was one of the guys that we waited for you to come back, Strazza, because we know Strazza's a fan of Meb Faber, and Strazza gets sensitive when we have his friends on and he's not around.
I mean, you had a couple of them on without me, so
I know we can't say no to everybody, but we saved Frank for your return, right? He's one of your favorites.
Better, yeah. So, can I go now?
Yeah. What do you think? Any thoughts?
About the poll? U.S. stocks have been the best.
State of the markets. State of the markets. The poll's kind of like a joke. Like we know. We're cherry picking at a specific date.
Right. Look at the ratio chart. Right. U.S. stocks have been the place to be.
Yeah.
We're still talking about the same themes that we were when I came back from Asia, simply because they're playing out now. JC, I was listening to a recording of our presentations from Manila. I know I keep telling you this, but I was saying the same exact thing. It's we got the recording. I just tweeted it this morning. If any of you guys want to go watch, it was the CMT event from the Philippines. It's a recording of Sean and I's presentation. But we were talking back then about, looking for some sort of a cool off or a breather from growth stocks and tech stocks and the strongest stocks, and maybe some rotation into these other areas. I'm looking at performance. Energy's killing it over trailing month, trailing week. And if you look at some of these energy charts, I mean, they still look really good, not too extended. Some of them look really ready to go. I know I keep talking about these oil services names. There's still opportunities out there, even with the indexes hitting this overhead supply.
So oil higher, rates higher.
And Vietnam higher. Over the trailing month, Vietnam's up like 10.5%. The next best country around the world is up like 0.5%.
You see this, Spencer? Strazza thinks he's an Asian investor. He has one lunch with
played one round of golf in Vietnam. No, they're killing it. They're doing great. So Vietnam looks good. Not many places around the world. The reason I'm looking at this is because global breadth has really dried up this past month. Not much is positive over the trailing month, or particularly like on a month-to-date basis. For example, if I look at performance, I'm looking at 60 ETFs right now, country ETFs. On a month-to-date basis, Turkey, Egypt, and Vietnam are up. The other 55 are lower. So just across the board, nothing's really working overseas either right now. So we're lucky that we even do have these sectors kind of showing some sort of opportunity, like energy.
I actually wanted to mention Turkey yesterday because that thing had its best week in quite some time.
What's wrong with this ETF though? Right, this one's always like jumping around, making crazy moves.
Yeah, everything is wrong. Everything is wrong with it.
Turkey. Like, what do you want? Like, this isn't exactly like high quality stock investing. And I mean, this is Turkey. Have you seen their currency? Right.
I remember talking about this thing when it was trading on the lows last year around $18.
Yep.
And boy, did those lows hold. I mean, if you zoom out on this chart, like what a major polarity zone that was, where we bottomed, carved out a really nice reversal pattern, check back, textbook retest of the breakout level around like $30, upper 20s, and now it's taken off again. The chart looks good.
I remember around Thanksgiving last year, talking about the turkey trade and it having nothing to do with dinner. And it was right around that time that turkey was actually breaking out. And it was just an interesting coincidence. I remember that.
Had like that monster gap.
Spencer doesn't, not amused.
TUR all-time high in 2010. So
yeah, well,
it's been a rough
for emerging markets in general. It's been rough. It's not just Turkey. Yeah,
you're right.
Right. Turkey's getting, the majority of the hate here in this conversation, but nevertheless, it's an emerging market story. Right?
Yep. All right.
What do you think? Bring in Frankie?
Yeah, let's bring on Frank Cappelleri, founder of CappThesis. He came prepared. He did his homework. He sent us some charts, and let's talk about them right now.
Hold on.
What?
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Wait, what was that, Strazza?
Nothing. I'll save it.
Okay, here's Frank.
Frank, what's up, buddy?
Morning, guys. Steve, welcome baking glad you made it back in one piece.
Looking sharp, man. Looking sharp. Frank's not anybody I'd want to mess with.
I'm not messing with anyone here.
I wouldn't mess with Frank, man. I mean, Frank's like a nice guy, but I wouldn't want to get on your bad side. Like you ever get angry at someone and really mess them up bad? Like you don't seem like the type.
Frank will break your kneecaps. Yeah, be careful.
You know what? You gotta check your ego out the door, right?
Yeah.
Trading
Frank will hire someone to do it for him.
So what did I miss while I was out, Frank?
Well, Frank, are you looking at more charts these days or coaching more baseball?
Oh.
Baseball's done in my house. It's all basketball now.
It's all basketball now.
All
Okay.
basketball.
Okay. So I'm not even gonna cloud your judgment. Why don't you tell me what's on your mind, Frank? What's on your mind? You're a thinker. You're always thinking.
Well, S&P 500. I would say the one thing is that character has changed. I know you guys have been talking about it for a while, and depending on what perspective you look at, as you know, I look at things in terms of patterns, right? And things really changed in the second quarter when you started to see bullish patterns started to work across the board. We know that the rotation really took hold over the last few months, but I try to have a positive stance as long as there are existing bullish patterns that still have targets to be hit, right? And so I think coming into August, I think it was the easy thing to say that the market was going to pull back, right? Everyone knew about the subpar seasonality for the month, and even the biggest bulls on the street started to take a tactical stance of being bearish. So I think right now, that's come in. I think it's really going to be interesting to see how that is dealt with, because I don't see too many bullish patterns that haven't had their targets hit right now. And now the flip side of that is, if one of these pullbacks, right, one of these consolidation periods now turns into a collection of topping patterns, and there are a number of those out there right now, but there's a big difference, as you guys know, being a potential topping pattern to actually one playing out and having downside targets hit. And so the concern now, of course, is that the run-up preceding to this was so uninterrupted that there are not a lot of big support levels to key off of. And so that makes it difficult. You have to go back to some key areas, but some of them were months in the past. And so I call a situation like this sometimes, you're in a support discovery mode, right? Where sometimes you may not be able to detect where the support levels are, but it's going to be up to the market to make those reference points, then the key offer from here.
And you think that's basically the environment that we're in right now? If we're going to print some sort of a short-term top here at the index level, we'll kind of find out what levels are important as we go.
Yeah, well, like for instance, the S&P, right, teetering, it's down about 3 or 4% from the high. Not a lot, but that's the biggest drawdown it had since February or March. And so you can look at small points here and there in terms of reference points, but I think the S&P number one has to stop going down, right? That's number one.
Mm-hmm.
It's the upside follow through, higher low, bullish pattern formed, target hit. That's really my checklist of things turning. And so right now, hasn't even gone through step one. We're holding support. Again, very short term, but that needs to happen first.
Yep.
And then while the indexes are doing their thing, particularly the S&P and the NASDAQ, a lot of these sort of mega cap growth, you got the New York Stock Exchange FANG index back to the former high. So it seems like there's just a lot of overhead supply. Do you think that this is going to be a scenario where the indexes are struggling, but you could still find winners underneath the surface, maybe in something like energy, or maybe materials, or maybe some unique discretionary, or where's your head at the individual stock and industry group level during this period?
Well, I think that just by going through our normal chart reviews, right, JC, like banging through each one of them or going through a screen, really gets brought to our attention what's working and what's not. So where I think around 2 months ago, Steve, I think one of the things you said was there's so many good looking charts. How do we know where to begin to find the base that's going to work?
Yeah.
Well, now there's not as many, right? And so obviously energy looks great, even extended right now. I would say, pockets of healthcare as well, just the areas that haven't broken out yet. So, the downside of that could be those underperformed for so long. Why do we expect those to finally come back? But if this really is going to be a story of continued rotation, then those bases that haven't broken out yet could see some sponsorship, and we can see those start to rally. And like JC, like you mentioned, they're off the radar screen, right? Energy is still, people talking about it, but there's not a lot of stocks number one in the ETF itself, and it's still a very small percentage of the index. So the bigger players really can't go in there and change their composition of their index if it's going to be that much more than what the index says. So I think that's something we have to look at as well.
I also think healthcare is a little interesting here, just fundamentally. I don't think people are too gung-ho to run into staples and utilities because they could probably get better returns in the bond market. But healthcare is a little bit different, right? There's some growth in there, and they're also defensive. And like you said, they've been lagging. Seen some bullish call flow in XLV and some of its components recently. I don't know. Maybe healthcare is a place that catches some rotation. Nobody's talking about it.
Can you throw slide? Can you throw slide 1 there just to show the healthcare? Frank, look at this chart of healthcare. You could probably draw it for me, knowing the amount of work that you do. But you know what really stands out is, you know, after 2021, you had the major indexes fall dramatically. The FANG index got cut in half. You know, you had massive corrections across the board. Healthcare went sideways.
Yeah.
Like from a structural perspective, like how do you not take that as a positive, right?
That's right. I think this one kind of lulls us to sleep a bit because it's been, you know, head fakes on both sides. But as long as, you know, if it's, to me, I'm looking at this and it's high level consolidation, very long term, but that's what it is. So I think you look at this and you can't be too greedy or too impatient with it, because wait for the breakout and see if it works, right? Because we've seen this type of thing happen before with other areas. Like for the longest time, industrials look like this. And head fake after head fake, and then finally momentum picks up, and we saw what happened over the last few months.
And how much weight do you give to the trend coming into this sideways action, right? Because we were straight higher for a year and then straight sideways for 2 years. If you threw a 200-day moving average on this right now, it's going to be flattish, suggesting primary trend sideways, but it's coming off an uptrend. How would you look at something like that?
Yeah, I would think exactly that. And again, not get too cute about it and be like, well, I'm going to wait. I'm going to put my money into it and it's going to work out. I think there's a big opportunity cost, especially this year, where waiting too long for things that haven't broken out yet can cost you a lot of money, because there's so many that did work out. And we see some of the names like, you know, Patrick Denoel put out to me yesterday, the MPC, you know, that's the energy stock was you look at that chart, it was up, I don't know what the count was, but over a 20 days, probably up 17 of them, right? So something like that for a longest time didn't do much, but when it finally happened, right, you have to go with a breakout.
Frank, you want to walk through some of these growth charts, like technology and semis breaking support?
Sure, there were a few of them there. I don't know how many you guys have on, but that's the XLK, right? Yeah, and so yesterday, just pointing out that one of the pieces we put out yesterday was talking about how, you know, if this market is going to turn, if there's going to be a buy the dip that really gets us higher immediately, it's probably going to have to go back into growth, just because the math behind it, right? And the problem is that, of course, we still haven't gotten down to levels where there's real support yet for the XLK specifically. I would say 163, then the 152 area. So yesterday we had a bounce, but look what it did. It just went right back into this mess of trend lines and moving averages. And so any one of these could be the start of something, but I just think it needs to take some time to make its way through. And again, I'd be much more willing to buy this after we see a bullish pattern form, maybe over the next few weeks first.
Throw up the semis on the next chart. Same thing, right?
And hold on,
same thing.
You did something in your note today where you're identifying all of the closes on highs at the intraday highs, like at the index level. We're not getting as much of them in the past month. I mean, tech screamed higher yesterday and closed on the highs. What are you seeing from the way the market?
Throw slide 13 up there, Spencer.
Yeah, right. I mean, that was a case across the board. And I think, again, we have to look at this much more than one day. And so, a day can start it. But overall, what do you like to see first? I like to look at intraday action initially, because that's the beginning stages of when things can change. And the best thing you can see, of course, on any day is a close not only above the midpoint, but on the highs. Yep. And that really was the case at least from May into the middle of July. And we can see how that changed, right? We have the arrows there, and the blue just signifies what the trend was going up, obviously higher at that point. Things started to change in terms of how good the closes were in the middle to the end of July, coded in yellow there. And then, of course, things started to change even more so to the worse over the last 2 weeks or so. And so, again, one good close over the course of a week or two isn't going to change much. But you want to see everything will start to work again. If we start seeing good closes, shows confidence from investors and traders, which really isn't there right now.
Can you go to slide 19 and show the S&P with the different anchored VWAPs? Can you walk us through what do you think this means, Frank?
Of course. Well, I mean, I take my cues from Brian Shannon, of course, and all you guys do as well. And so I think what's been really helpful about it is the anchor revalue from the most recent high in July has really capped any potential advance. I haven't seen that many, but just over the last 2 weeks. So I think at the very least, that's a good resistance line. And the last high from June has been good support, right? And so when there's nothing else out there and moving averages don't matter as much, I think this is a very interesting and very useful tool to have on there.
So what are we buying, Frank? Here we are. It's literally the middle of August, literally, and we are halfway through the third quarter. We had some run in the first half of the year, best first half of the NASDAQ of all time. Starting to see some rotation over the last month. The new 52-week highs list peaked a month ago. So kind of really been seeing some churning underneath the surface. Not much of a bid out of the more defensive areas like low volatility stocks and consumer staples. Haven't seen it on a relative basis or an absolute basis at all, which to me suggests that this is more of a correction than a 1929 all over again, right? Sort of scenario like you might read on the old Twitters.
Yes,
and or the X as the kids are calling it these days. But you know, do you agree that this might be some more of a correction than the end of the world? And if you do agree, are we already buying something, or are we going to sit back and wait?
Yeah, I don't think there's any rush to do it right now. And again, I think we have to see how this plays out. I mean, people can make long-term prognostications, both, high and low, but I don't think that's really worth it. It's because we're looking at price action, right? And that dictates what we're doing. And, there's been calls for the market to roll over from any one of people that we see on Twitter or on TV over the last few weeks to months, right? And so I look at things in terms of what can change the market's character. And again, we just talked about how things have changed for various reasons, whether it's closes or patterns over the last few weeks. And until that changes again, I don't think there's any reason to go into anything unless, we see some good action underneath the surface. Like what I talked about on the weekend piece was a biotech. It's symbol TECK. I'm sorry, TECH. So it's a biotech name, right? It's a healthcare name. It wasn't one of the outperformers from, like, for instance, pharmaceuticals last week, but that's a base to me, right? I didn't send it over to you guys. We can call it up there. And I would like to go into an area like that. And biotech is underperformed, but it's still something that looks like it wants to potentially break out, right? And so there's a host of those, and maybe there's some energy as well, and different areas. But I just think it's like kind of a stock pickers environment right now, where over the past 2 months, it was more like a lot of things are going up together.
And when you talk about a stock pickers environment, I think that a lot of times that's a cop out. You know what I mean? Like, oh yeah, stock pickers. But like in this environment, I literally think that that's what it is. Yeah. Right? You feel me?
Exactly. And that's the reason why. Again, if you just go through all 500 stocks in the S&P 500, there are not a lot that are about to break out right now, right? And that's what we saw, from I would say April, but I think more so in June when the rotation really took off, right? That's when things, and it's no surprises that, the S&P was up almost 10% that month, right? And so no reason to believe that we can't consolidate constructively now, September. And I don't have to tell you guys, seasonality really kicks in, positive seasonality in the fourth quarter. And if you look back to all these different studies that like our friends like Ryan Dietrich and others have done over the first 6 months of the year, tends to have a good 6 months of the year, maybe not as good as the first 6, but there is a tendency to see a good start to a year finish well as well. And again,
and you coming from the institutional side for 25 years, Frank, there's got to be an element of FOMO there, right? It's not just the individual Robinhood YOLO investor, but the institutions chasing their benchmark have just as much FOMO, probably more, no?
Of course. I mean, I think that they really dictate the pace there, and you understand why. If you're behind, you need to catch up. How do you do that? By buying more, right? And so you think about like what causes uptrend, not just really buying the dips, that's one thing, but buying strength, right? And then that really
it's not the fundamentals, Frank. It's positioning that drives prices. I can't believe it.
Well, fundamentals do matter, but you know how that works in the past 2 years or so. If you ignore price action, then you're really behind the ball. So I think that's really the way I'm looking at things now. You know, it's a pullback. It's bigger than what we've seen over the last 4 months, but not anywhere near 2022. And one of the things too, as we talked about it last time, is that there still aren't a lot of big daily moves on either side. A little bit more recently, but you're talking about a big drop off since last year and the beginning of this year. So if that remains the case, where you have a pullback that's quote unquote orderly with not a lot of huge moves in the S&P and that such, then I think there's the ability to think that there's a dip buying opportunity at some point in the future.
Talk about that a little more. Yesterday, you replied to one of my tweets and you said never to short a dull market. Talking about the lack of volatility in the S&P 500. What does that mean? Don't short a dull market. What do you mean?
I thought he was talking about Bitcoin.
Yeah,
He was.
well,
I think it applies to maybe a couple things right now.
Yeah, well, how I would describe the S&P over the last 3 months as dull, right? There was just a handful of 1% moves up or down compared to, again, even the beginning of this year, where, you know, of course we're off the lows, but there's two-way volatility is a big thing. And I think that's a much better, looking at the 1% moves is a much better indication of that than just the VIX. And because of that, that means that breakouts weren't working, right? So you had these big moves, but you get a whipsawed right away. Yep. Whereas much different environment as April began, where the breakouts, especially on the S&P, from my work, 4 different bullish patterns saw breakouts. Wow. Those breakout zones were not violated, and the targets were hit, right? And so that is what determines, you know, an uptrend.
Yeah.
And so when you short a dull market, to me, you believe that things are going to reverse hard, even though the market hasn't shown any volatility yet.
Frank, any alternative assets that you're interested in? You YOLO and silver down here, maybe? Oil futures, bonds, any alternative to stocks while we're sitting around waiting for this thing to figure itself out?
Well, I do think Bitcoin is interesting. You know, we talked. I had a chart there just showing them looking at there it is, just as a collection of wedges, right? And so on the way down, rising wedges, of course, bearish. On the way up, falling wedges, bullish. And I think that as long as those happen in the confines of a bigger uptrend like that, then you have to expect the next move in Bitcoin to possibly be higher again. So I think that's interesting. And Steve, because the volatility has been so low, you know, I asked a question the other day on Twitter, like, what is Bitcoin annoying the bulls or bears more? And both of them, you know, when it only has a big rally or two for a few days and then dies, you know, it frustrates every side. No, I think
isn't that the market's job there, Frank?
Yeah, exactly.
It has been boring and frustrating at the same time. And I love this chart because it's a great visualization of just, you know, how we want to earn the direction of the longer term trend when we're looking at these short term patterns. Beautiful.
Frank, how many charts do you think you're looking at a week?
A few hundred.
That's more it? Bullshit.
He's looking at more than that.
Come on.
You sent us a
couple hundred. You sent us a couple hundred this morning.
Yeah.
He's too modest.
Well, I guess the point is, you know, you look at the same few hundred over and over again too, right?
Fair. And then do you do more of your charting during the week or on the weekends, you think?
I would say, well, you know, I put out a number of reports per day and a big one on the weekend. So I would say it's pretty equal. As you know, JC, running your own business, there's no time off, but it's something we'd like to do, right?
I was going to say, fortunately, you like this shit. It's not like, oh, I got to look at charts now. It's like, all right, let's look at some charts, right? You know what I'm saying?
But guys, aren't weekend mornings the best? It's quiet. Things aren't moving around. Your inbox is quieter. Your phone's quieter. Like, a good Saturday.
The kids are screaming. Strazza doesn't have any kids, so he doesn't know, Frank. He doesn't know. He's got a nice, peaceful day. Yeah. Not around here. Listen, Frank, you got a lot of vowels in your last name. So I'm wondering, what is your favorite Italian dish? You can have anything, any Italian dish at all.
This is good.
Well, you know, I grew up having spaghetti and meatballs my mom cooked and made, you know, from scratch all the time. So I got to go with the traditional one right there.
Mom's spaghetti and meatballs. I like it, Frank. I like it.
Wait, what's the best pizza in the city?
Wow.
Man.
That's aggressive.
Well, I think John's Pizza has a pretty good reputation. I'll go with
Bleecker? John's on Bleecker?
That's the original one, right?
They're all the original ones. But yeah, I
Yeah,
think that's
right.
nice. I like it. And what you're in Westchester, right?
I am. Yep.
What's the best Italian joint in Westchester? You go down to Arthur Avenue, screw Westchester.
Oh man, well that's the Bronx, but yes, I would definitely go over there for real.
Anything
Italian
north of 125th Street is upstate New York. Let's be serious.
food. That's right.
So is there something in Westchester that you prefer over Arthur Avenue or no?
I mean, there are a number of choices around here. I don't want to single out any of them, but you know, if you ever want to venture up here, we can go.
Such a politician.
There you go.
I'm sure Frank eats great grinders on a regular basis.
No, he's not in Connecticut. He doesn't eat grinders. They're called heroes where he's from. Right, Frank? Tell him.
They are called heroes, but there is a section here that calls them wedges.
Wow, so
Which I
confusing.
didn't know when I first moved here. I was like, "What are they talking about? A wedge, like a pizza?" Like, no, it's a one of those long. I'm like a hero, like you said, or a sub.
Right. I like it. All right, Frank, you're the man. Get him back soon, Spencer. We need Frank here more often. He needs to be in here once a month at least, or something.
Yeah, let's do a monthly thing. Let's talk to Frank about
Yeah. I like this.
Love to.
All right, Frank.
All right,
Enjoy
thanks,
yourself.
guys.
We'll meet in the city for beer soon.
You got it.
Adios.
All right. Always good stuff.
Frank
Always good stuff.
Frank Cappelleri is not just a friend of the show and a fan favorite. He is a host favorite.
Yeah.
One of my personal faves, and I know Strazza as well. Spencer's like, who's this Frank guy?
Yeah, he's one of the first guys that I met at the first CMT symposium, same day I met you, and it's just been such a good mentor.
The man. He's the man. He worked with Louise Yamada and Alan Shaw back in the 90s. Did you know that?
Yeah, he's too modest. He doesn't tell people these things. He doesn't brag.
My favorite Italian joint. I don't want to single one out. Are you kidding me, Frank? Get out of here. Give me a name. God damn.
All right. Should we do some charts?
Yeah, let's go through a couple of charts before we bring in Kimmy. What's going on this morning? Anything exciting? Got the Dow down 70 basis points on the futures. You got S&Ps down 50 bips. NASDAQ down 40 bips. Bonds down a little bit with interest rates inching higher. Gold down 30 basis points. Same with silver. Copper down 1%. Oil down 1%. Natty Gas, the Widowmaker, volatile as usual. By the way, if you're bored in this market and you think this market is boring, go check out natural gas futures. That'll give you a nice little heart attack in the morning. And dollar inching lower this morning. So that is the current state of the markets. Volatility index up a little bit as well.
I don't see another stock that's moved this morning. I've been watching the headlines, been watching the early movers. That's moved as a result of a 13F filing. I see one stock that's moving pre-market. Those of a 13F.
No, there are a couple.
Send over all your penny stock names. I'm not counting those.
Oh my God, can we not with these penny stocks again? Yesterday was too much.
I
can't. We are real investors that deal with real companies, and if you're not a billion, you're useless to me. You're useless.
All right, there's only three that I've seen, but
it's more than me.
All right, all the home builders are what?
You stole my point. I was going to say it's only Buffett's one. DR Horton is moving. That's the only one.
So can you tell me, hold on, for us ignorant fools who don't read 13F filings or G's, what letter is it this time?
F.
For us ignorant folks who didn't catch the old 13Fs, can you give me the gist? What did Buffett do and what did he not do?
So reminder, these are positions as of the end of last quarter. So
if I had to guess, Uncle Warren's still in them, like he hasn't flipped them yet.
Right, that's a pretty safe assumption. So anyway, new positions from Berkshire Hathaway last quarter. They bought DR Horton. They bought 6 million shares of that. They bought 11,000 shares of NVR. That's a lot, man. That's an expensive stock.
Of what? NDR.
NVR. Yeah, and then 152,000 shares of Lennar.
Why do you say NVR is such an expensive stock? It's $20 billion.
It's a $6,000 stock. He's just talking about the purchase.
I'm just talking about the price.
You're one of those.
Yeah. No. It's just
he's talking about the cost basis of Berkshire's new investment.
Thank you. All right. So anyway, DR Horton, NVR.
Why is that?
He's looking at the amount of shares that Berkshire purchased, and then the share price matters to determine how much they paid.
Okay, DR Horton, NVR, Lennar. Those are the three new purchases.
Yeah.
The only three new purchases.
Okay.
How many Billy between the three?
How many Billy? Less than a Billy.
Less than $1 billion? Who cares?
Yeah.
But
who cares? It's a $750 billion company.
The
and they buy less than $1 billion.
The vast majority of the new buys was DR Horton. That was like almost, in terms of dollar amount, that was almost all of it. Do you want to know what else they did? They increased their position in Capital One by 26%. Okay,
Yeah,
2
saw that.
Okay,
that much, huh?
yeah,
That's COF.
and we know he's been buying Oxy, so they raised their stake in Oxy a little bit.
Do you see how he's like spreading out? Like him and Charlie are like, yo, we need more real estate exposure, home construction, but they're too big to just YOLO one stock. So you got to diversify it a little. We're scaling our options portfolio. We're actually gonna leverage it into $1 million portfolio that Sean is managing, and in order to continue to bring in these returns, we're going to be diversifying expirations and strikes amongst our positions so that we can get larger positions. That's like our way of doing the same thing that Uncle Warren and Charlie are doing, and diversifying their exposure to home construction so that they can get the size that they want. These are little companies, right? Despite what Spencer's saying, how this is an expensive stock, it's $20 billion. That's nothing.
All right, I should have.
So if you want like more exposure, or it's not me and Spencer,
high priced.
Just to speak quickly, Tepper loading up on Nvidia helped the stock yesterday. I don't think so, and I don't know when that news came out, but yesterday Nvidia's run was about just ridiculously bullish analyst commentary. It's not stopping. They were being called Kingmaker, the Kingmaker of AI yesterday by UBS. I mean, these notes are just crazy. And if you actually read the numbers, the projections are loony too. I'm not saying. Can
I just tell you, David Tepper is the man.
He's awesome. Tell you, I love David Tepper. He's one of my favorite.
So I'm gonna tell a quick story, and then we'll bring in Kimmy. So I'm in Vegas, right? We're hanging around in Vegas. We're at a lounge, and it's myself and Tepper.
Isn't he a hardcore poker player?
Blackjack.
Okay.
He likes to play blackjack.
Sorry, but whatever. Okay.
So there's this like very attractive young lady who is selling art, and I think he had just gotten divorced, and she's like all over this guy. And so it's myself, me, Tepper, a couple of other friends of mine, and Josh Brown. And then Josh is being, Josh is always busting balls and just being silly. And he's like, "Oh, Tepper, can I show you my drink making skills?" And like, kind of trying to show off that he can make a cocktail. And Tepper's like, "Hey, Josh, why don't you shut the fuck up and pass me one of those beers?" And I spit out my food. I was laughing so hard. Like, just with it, didn't skip a beat. He's the man. Love him.
All right.
Shout out
on that note, let's bring on our resident day trader, Kimmy Sokoloff. See what she's watching today.
Kimmy.
Morning, guys.
How'd you like my David Tepper story?
I know. I just heard that. That's funny. That's actually very funny.
Yeah, you see how I'm name dropping now? See that? Because the more
right?
billionaires I mention that I hang out with, the cooler that makes me,
Very cool.
So,
I don't even know many of those.
Listen, it was cool. It was cool for me because like he still is a legend, but this is years back. But anyway, good times. Kimmy Sokoloff coming in hot. Only one loser yesterday, so that means 1, 2, 3, 4, 5, 6. 6 for 7. Made money in UNH, which we discussed, Tesla, Adobe, Amazon, and then shorted Celsius and Eli Lilly, and then one loss on the Qualcomm. But overall, good day. S&P and Q still stuck below overhead supply. I do like that you reiterated that in your note. And today, look at it, Micron. Okay, aren't you always saying how Micron's so hard to trade? Isn't that what you?
Yeah, it's a pain in the butt. I'll give it some wiggle room. We'll see. Obviously, semis had a great day yesterday, I guess because of Tepper, right? Loading up on NVIDIA.
Is that really why? I don't think so.
No.
Yeah, I look at it as like an oversold bounce, But it was like, was it really going to go that far or not? And then, listen, the SPYs were at 448 yesterday. Now we're back down to, I don't know, 445.50 or 80 now. you know, we're really stuck. We're really stuck under resistance levels. Let's see if we get going. You know, we'll see. We'll see. It's such like a bifurcated market. It's like, you know, I want to short Qualcomm down, but then it bounced. I said, you know what, let me just get out of this in case the market keeps going. Then, of course, you know, China data overnight and all that stuff hit the market. So it's a little bit tough market, but we'll see. We'll see.
What else is on you? Can you walk me through the price levels in Micron, because I'm interested in this?
Yeah. I'd like it to hold roughly around 67. I'm looking for like 68, 80. It's very bouncing, right? Yep. So we'll see. Let's see.
So big move yesterday, you know, hardly any pullback at all here pre-market.
Right. It was before when, you know,
before.
I mean, the SPYs were down $1 before. So we'll see. You know, now the gapping up, retail sales came out, I guess, better than expected. But you know, I don't know, you know, but the market's still down from yesterday. So we'll see. I'm going to give it some wiggle room in the morning and see how it goes. And, you know, just see how it hangs on to like the 67 area, 67.20, and see if it can get going.
What do you think about this market? Expect, you know, S&Ps, Qs, expect churn?
Yeah, you know, usually you get like a mid-month bounce. You know, I don't know if it's going to happen maybe this week, next week. Usually you get a mid-month bounce, and then, you know, and then September is weak again. Not saying the bounce is going to last, you know, but, you know, typically, don't you typically?
And then
September.
You buy in October and get yourself sober.
Right. You mean we stop drinking?
This comes from Stock Traders Almanac. Jeffrey Hirsch.
I know. I didn't make a joke.
I don't think he stopped drinking. I certainly have not. All right, Kimmy, I'm going to be watching. I like this Micron situation. That was a huge move. That's an eye opener. Strazza was pointing to here a little bit off air, you know, how technology and growth had like their big one day relative movement in quite some time. So that's got my attention. Yesterday was a big day.
Energy's gapping down today, huh?
Energy stocks or crude oil?
Well, stocks, but also crude, I would assume.
Down, I mean, crude's down 75 bips. The energy sector's down 60 bips. You know, same with Chevron. Exxon's down 30 bips. Seems like a non-event. Seems like it's moving with the market.
What they say about my camera, Spencer? Pinhole.
Don't worry, Kimmy. I'm getting you. I'm getting you a new camera. Don't worry about it.
Can I explain something? I am like technology antiquated. Okay.
Saying that
I will get Kimmy a new camera. Everyone.
That is saying how Kimmy's camera is the first one ever.
Right. Don't worry.
I freak out. I just want my computer to start, and you know, I want my computer start
and your software to work when you execute trades.
How long do you watch the open before you make any of your moves? Hey, Michael. Usually I'll wait like 5 minutes or so. Sometimes I jump in right away. But you know, I like to let the market settle. Because when the market opens, you get like sometimes like these erratic moves. Watch it on the 1 minute chart. So I usually typically like to wait five minutes or so before I enter a trade. And sometimes you miss the trade. Sometimes the trade goes without you, and then so be it. Hopefully there's another one. That's the way I look at it.
And there usually is, Kimmy. There usually is.
All right, Kimmy, it's getting late. You got 5 minutes. Go get him.
Go do your thing. Go get him. Go get him.
Hi, guys.
All right, guys, join Kimmy's room if you want to hop in there. Even if you're not sure if you're going to like it or not, that's okay. Hop in there for a couple weeks, and then she's so convinced you'll like it. She won't even charge you for the first couple weeks. So check it out there. daytraderpro.stockmarketingmedia.com. Link on the screen. Link in the chat. Link in the description. She's over there right now, talking through your setups today and trading through the open. All right. Can we do the one earnings report we had that I thought was interesting?
I'd love to talk about C Limited.
It wasn't that one. All right. Where's my earnings bumper?
All right. What do we got?
All right, there's the calendar up on the screen. You should see it. unless it's black, in which case you won't see it. Come on, funds. Anyway, Home Depot is my point. That's what I'm trying to get at. Home Depot earnings this morning. Stock was down slightly, kind of flattish in the pre-market, but EPS beat, sales beat, guidance reaffirmation. They had some tough year-over-year comparisons. I think a lot of companies have had that. So their comparable sales were actually down on a year-over-year basis in the US, down 2%. But I think that's more so because last year was such a strong year. Again, coming out of COVID and all that stuff. So tough comps, but all in all, a pretty fun report. And this is one of the companies that people look at as more than just an earnings report. It is in a lot of ways an indicator for the consumer, an indicator for spending and home maintenance and projects. So there's the chart as you can see it, and it looks like it was an okay report.
I know you're right. It's one of these bellwether companies that people do use to like make a read on the larger economy, but I don't know if that's been the best move. I'll tell you why. Home Depot has defied all odds and all economic recessions and all fears of a recession with the numbers that they report over the years. I mean, this company has been maybe the single most, resilient when it comes to reporting consumer numbers. So I don't know if they give you a great read, right? Other companies like Walmart and Target will hit problems. Home Depot's still cruising higher and beating estimates. So
Strazza, don't look. Strazza, don't look. What is the market cap of Home Depot? Don't look.
God, it's got to be 130.
I would have said 100.
Yeah, that's a good guess. That's what I would have guessed.
180.
330, bro.
I mean, they deserve it. Look,
330.
I'm going there in like an hour.
Why are you going to Home Depot? There's this thing called Amazon that delivers shit for you. It's wild. You should check it out.
No.
What are you doing at Home Depot? Seriously.
I actually have to do a couple things. I have a list.
Tell me what you have. Are you allowed to share it?
Things I got to buy. I got to buy like blinds. Hopefully figure out this light situation here. Finally, I got to buy some new fire alarm detectors. Apparently, I got all sorts of things to buy. What else,
dude? Strazza hanging out in Home Depot. To be a fly on the wall watching Strazza at Home Depot.
I don't know.
Can we? Speaking of train wrecks, can you throw up this C Limited?
I mean, look,
throw up slide 1.
There's something here when they figure out, how to price this company right, because it's been all over the place just this year. There's opportunity here, and I'm looking forward to getting along this name, but way too soon right now.
Opportunity. This thing's making new relative lows. This thing is a disaster.
Yeah, well, down 20% this morning. They reported a couple hours ago.
What did they report? They invented a new cancer?
Earnings below estimates, sales below estimates. You don't see that too much these days, where a company misses on both the top and the bottom line. Kind of rare.
This thing, what a disaster! What is this? This is an Asian retailer, right?
Online retail. It's the Amazon of Southeast Asia.
And when you were in Southeast Asia last month, were people talking about how they just picked up some paper towels on C Limited? How does this work?
I actually had like a detailed conversation with Nikki Yu, where she talks all about the fundamentals of this company and kind of what they're going through and the struggles that they're having currently, which I don't remember well enough to kind of regurgitate the point she was making here. But it's on camera. It's on camera.
Strazza was in a food coma. Strazza had like 3 lunches, 4 dinners. That's what happens when you hang out with Nikki Yu in Manila, over in the Philippines. So next time you're in Manila, say hi to Nikki Yu. Go hungry.
And really, if you want to watch our CMT presentations from Manila, we had a great time. It was a great event. It's on my Twitter feed. I tweeted out this morning.
All right, guys, I got to hop. You guys enjoy the rest of your shows. Tell Patrick that I said hello. I love the Ben Graham quote. Again, I actually tweeted it out yesterday. I'll mention it one more time. This is from the chart report last week, and the exact quote was from Ben Graham, who's credited with inventing the strategy of value investing using fundamental analysis. And as it turns out, he's a closet technician. Ben Graham said that the intelligent investor is a realist who sells to optimists and buys from pessimists. And he's a closet technician. If you ever read The Intelligent Investor, Chapter 3 is all technical analysis.
Yeah. I haven't read it.
I'll never read that book, I think.
3, and then you can close it after that.
It's like $150, that book on Amazon.
Well, chapter 3, technical analysis. All right, guys. Adios.
All right.
Is he serious? I can't tell if he's joking or not.
I'm being dead serious.
All right. I had no idea. That sounds strange. Wow.
All right. Well, maybe strange to you. Adios.
All right. I think this is the last time JC is leaving us early on Tuesdays, or so he said. I don't know. Whatever. We will have Patrick Donawilla on in, I don't know, a few minutes here. But what else is on my list? Oh, we didn't do the hot corner, and we didn't do. Did you see this DFS this morning? Discover.
Yeah. What's going on here?
Yeah, 8K last night. The CEO's out, effective immediately.
Yeah. What do you think he did?
I so want to know.
Yeah. We probably won't find out. It sounds like.
I don't know. I hope we do, but yeah, what did he do to get fired effective immediately? Something bad.
I mean, he's hurting the stock too. It's down 10%. So he must have been a good operator because the stock's not happy about it. But yeah, something. Right?
Well, maybe the implication is that shit runs downhill and there's more shit coming. I don't know.
It's like you said. I mean, and we talk about this often enough on here. It's never a good thing, right? No. Especially not to do it like in an emergency situation like that. It means there's probably no backup plan. There's nobody in place to run the company. It's not good.
No.
Hate to see.
All right. So the top stock on my up filters this morning, all through the whole morning, was actually Grindr, GRND, the dating app. It was because of earnings, but
it's a public company now.
It's a public company. I keep forgetting. I think they SPAC'd. I think that's what it was, and it's up 20% this morning.
Is this Tiga Acquisition Corp? GRND?
Yeah, that's it.
You're kidding?
No, I'm not kidding.
This is Grindr.
Yeah.
Are you sure?
Yeah. Wait. Well, when you say whatever Acquisition Corp, that was the name of the SPAC that bought them. Yeah.
All
so
right.
Anyway, $5 stock, and JC hates it, but that was funny.
They all look pretty terrible outside of Match.com.
Yes. All those types of companies. Even in Match doesn't that look bad?
Match looks bad, but better than something like Bumble or Grindr.
Oh, they all look terrible. Match.
Bumble's trading on lows too, like Grindr.
What's up? Isn't IAC? Don't they? I don't even know anymore. Okay.
IAC holds a large stake in Match. But also a lot of other things like Craigslist.
Yeah.
Whatever.
Okay. All right.
Hey, did you watch the clips of Cliff's CEO, the Cliff's Natural CEO?
I did. The clip that you sent was, what was that, like 5 years old?
It was like 2017 or 18. It was 2018.
Yeah. The clip you sent, if I can drop it in the chat in a second, it was from an earnings call. We didn't get what the question was, but I only presume it was a negative leaning question because the CEO was very unhappy about it.
One of the analysts refused to understand how many shares were actually outstanding. So he was doing his math based on the wrong share count, and the CEO just lost it. I've never seen anything like it. He said terrible things that, if that was a Disney CEO saying those things, it's gone.
He said, you what are you, like, you've brought shame on your family or something?
Embarrassed? Yeah. You embarrassed your parents?
You've embarrassed your parents? Yeah.
We're going to run this stock price higher and like run you over.
And then he said shorts are going to kill themselves. That's what he said. Shorts are going to commit suicide.
Yes, you said suicide. So it's pretty funny. I think his name is Lorenzo Goncalves.
Yeah.
Look, some of these like cyclical stocks, commodity stocks, CEOs, they're built a little bit different. Especially in like the metals and mining industry, it's not uncommon to have like a very loud and flamboyant gold mining CEO, and that's what this guy is at Cliffs. I mean, I love the way he's run this company. He's a badass, totally, and he absolutely went and put in like an unsolicited offer for U.S. Steel, which was kind of a scummy move too, because they're like the same size, these two companies. And, but that's just the kind of guy he is. Very aggressive, runs the company, I think, in the best way. And the company's done well under his rule, too. I like to see that kind of.
Hey, speaking of the U.S. Steel, we were wondering about, is there a better offer coming down the line? They got a better offer yesterday. They got an all cash, same price, but all cash, right? The Cleveland Cliffs offer was cash and stock. This is an all cash offer for $35 a share. So
wait, from who?
S-Mark? I don't know. They're not public.
So there's another offer that we now know about.
Yep. 2 offers.
I thought The Intelligent Investor was that really expensive book. Maybe I'm wrong. What's the other famous value investing book? No, it's The Intelligent Investor. Yeah, if you get a real one.
There is one. I can't think of. You know what's expensive? I listened to the Founders podcast. He did a book. He did a podcast on the founder of Ferrari, and his whatever memoir is like thousands of dollars because there's like no copies. Ken K says it costs $10 on eBay, so that's cool.
Yeah, I'm seeing cheap ones now too. I thought back in the day this was like $100 and something book.
Maybe it's like the original versions or something. I don't know. Anyway, okay, should we do a hot corner?
We could. There's not much.
The table's huge today. What do you mean?
CLF has been flat for a decade, right? But you have to benchmark it against its peer group, right? It's been in a space that's been in a cyclical downtrend for a long time.
It's true. All right, let's see what's on the hot corner today.
Hot corner. So hot right now.
Wait, we had it. There it is. Okay.
Oh, if only I could see it.
Listen,
Sarepta Therapeutics was on the list today. We could just go right there, back to back, sizable purchases in SRPT. This was one of these really hot biotechs, a few years back. I think they had some big approvals back in 2017-18. You could see the stock run. And it's just been basing at its former all-time highs from like 2000, right around 160 for 5 years now. Yeah, you can see it in that last arc in the upper right-hand corner of the chart. If you zoomed way out on this chart, this is happening right at the dot-com bubble high. So little round trip all the way back. If you get the breakout and we take out, break higher from this large prolonged range, you could be long this stock. Probably be a leader in the biotech space. Let me see how big they are these days. Not a small company at this point. Yeah, 10 billion. So good for them. Seems like they're well on their way. And look, there aren't a whole bunch of good-looking charts in the biotech space right now.
No, there are not.
I think we'll talk about healthcare a little bit when we're done with this segment. I have a couple things I want to point out just about, the importance of picking the right stock in that group. Let's just finish the list here first. Expensify, back up on the list. As if we haven't spoken about this one enough, the chart still looks terrible. That's EXFY. We're not really interested. And then it really stands out, all this regional bank action, right?
Key Corp, yeah.
Key Corp, German American, and South Plains Financial. Continue to see these executives from these regional banks come out and buy shares.
Mm-hmm. There, I think we have a few.
You going on any cruises this summer? Royal Caribbean?
I think we have a few of the charts. No, we don't. I have talked about it wanting to go on a cruise for a couple years, and it's never materialized. So yeah. I would. I'm not like I've went on them before COVID. I'm not like morally against cruises ever since the pandemic. But I have no plans.
Listen, cruises have been deep value since COVID.
I did almost go on a cruise. When was it? Was it like the winter of it's like summer of 21, I think. They were when they first started up again, and they were so cheap.
Yeah, so I booked one. I booked a cruise. I was fading COVID. I was fading the pandemic, so I booked a cruise.
Yeah, it's like $50. It's like $50.
Yeah, and they canceled it. And like, we got our money back. But I tried. It was too early. I was too early on that trade.
Yeah.
Coin, please go up. That's probably not a viable strategy.
Should we bring on Pat here?
This soon? I don't know. Those are gonna have 20 minutes of Patrick. Yeah, bring him on. Bring him on.
Let's talk about the chart report, man. We got some stuff. We got some charts.
Hey, 20 minutes of Pat.
Patty D,
What's going on? Of
you wake up early for us today?
course.
Nice.
Pat, how do you live on the West Coast? Like, you don't wake up for the open every day, right?
I do. I try to.
You do?
You know, if I have positions on, especially, but you know, if I miss it, so be it.
All right.
No, but honestly, it's at this point, it's like a natural reaction. Like you almost have to wake up, even if just for a second, just check things, and then market's boring, just go back to sleep.
I feel like Patrick's always awake. I texted you in the middle of the night last night because I couldn't sleep, and you're just normally.
No, that one I woke up to that one, but okay. Yeah, I'll get back to it. I haven't gotten back to you yet, but
Pat stays up. So Pat is our member of the analyst team who he just stays up all night and watches Bitcoin prices.
Exactly. That's it. I just watched them do nothing this past month. I mean, that's been incredible. It's almost like it's moved so little in the last month. I mean, you and I were talking about it pretty much since like July 25th. It just hasn't done anything. And we're talking about something that's like, it's pretty normal for it to make 2% moves, things like that. But lately, I mean, I have to put in the daily numbers for the chart report, and it's been like 15 basis points. I mean, things we'd consider flat in the equity market.
So it's been trading. If you open up an intraday chart, more or less in a 250 point range for like 5 or 6 days now. 250 points. That's 0.8% in both directions, right?
Yeah, I mean, I looked at it on a closing basis on the last like 3 weeks. I think it was like a 2.5% range. It was less than 3%. Looking at it close to close, but just absolutely fallen asleep. And it's been just moving sideways at this 30,000 level for all summer, really. But really, those last like 3 weeks, 4 weeks, just completely dead money.
So someone acquired Bitcoin. We just haven't. The deal price was $29.5, and it's looking like it's going to go through.
Yeah. So did you guys see the 10-year briefly tagged a 15-year high?
Yeah.
Come up a little bit, but what I thought was really interesting yesterday is you saw tech outperforming by a decent margin. Like NASDAQ and tech overall just got a nice pop into the close. That's happening while rates, I mean, rates have only, the 10 years only closed higher in the last over a decade 3 times than it did yesterday. So only 3 higher closes than yesterday. And tech is actually holding up pretty decent.
You want me to tell you what I'm watching for the bond market?
Yeah.
You want to know? German 30s.
Okay.
That's it.
Why?
Because that one's going to make new highs before any of the others. Germany and developed Europe has been leading the U.S., and the long end is still leading, I guess, the shorter end of the curve. So if you look at DE30Y in TradingView, that's the signal for the German 30-year yield, just made new, this is its highest level since just about 2013. And then before then, it would be 2011. So
wait, let me see. Do we have a chart of this?
Fresh decade highs.
Yeah.
Fonz, can we get one of these quick? I'm looking at it.
Is that,
you know, Steve, that German 30-year, that looks a lot like energy, doesn't it? Doesn't it look a lot like the energy sector?
Looks a lot of things that move with rates. So yes, right. I really think this is the one. If this holds, you're going to see the rest of Europe follow, and you'll see the U.S. also. It only be a matter of time.
Fonz has it. He's going to bring it up when he's ready. There we go.
So draw me a little like horizontal resistance line there and show that breakout so people can see what we're talking about. That's it, right? And you can draw a similar pattern on the 10-year right now. I think that's where things are headed. The bond markets all around the world, they've all looked the same. They've just moved at, kind of different rates between at least developed Europe and the U.S.
Yeah, and obviously the big question mark there is what does that mean for growth and tech and things like that? And Steve, I know you know I love betting on failed moves before they happen, but
Yeah, you would
you
bet.
gotta ask yourself both questions, right? Like, what if rates break out, and then what if they get rejected, right? Or what if they fail breakout here, and what does that mean for tech and all that? So, I mean, I don't think too many people are expecting that.
A failed range breakout here, right, would spark a new leg higher in the leadership groups.
And you're talking tech, right? Like,
yeah, like the price action in Nvidia today, for example, would be more consistent with an environment where that German 30-year is failing and rolling back over into its range.
Right.
And like you said, the 10-year ran up, tagged a big level, those highs from last year, and is now fading a little bit. Watch the dollar too. There was a moment yesterday where I was like, look at these candles in bonds and the dollar. They, looked like they had some long upper shadows, kind of repaired it into the close though. But, here's the dollar running into those pivot highs. This is a big level here, 103. So,
yeah, and I think we're all expecting, if we see rates and the dollar moving higher, I think we're all expecting to see the same type of stuff as last year. And so far, we're just not. And I don't know that means the correlation breaks down. I think that might be a stretch. But it is kind of interesting to see us kind of holding in there pretty well.
Listen, really ugly day for the banks here.
Today?
Yeah.
Yeah, the Fitch ain't helping.
Is that it? Is that what's going on?
Yeah, Fitch is going to Fitch, right? They threatened to downgrade the debt. JP Morgan is who they threatened. So, that's a little bit different than threatening to downgrade regional banks, right? So anyway, I don't know.
JPM, huh? I wonder what the reason is. Somebody read that?
I didn't. Sorry.
The bear case for JP Morgan is that they're going to be the ones paying for this huge mess. What do I mean by that? Banks can't just blow up left and right without the FDIC insurance fund growing a lot, right? Taxpayers aren't going to pay for this. Federal Reserve, U.S. Treasury can't pay for this, right? The banks are going to be the ones to pay for this. They're going to be taxed more. They're going to have higher fees and payments into the FDIC fund. That's going to pay for all these banks blowing up, and it's going to fall on the ones that can pay the most. JP Morgan's, your Bank of America's, your Wells, like they're going to be the ones paying into this fund. You see it all the time in these industries, right? Throughout economic history. If you're going to cap the downside of an industry, you're also going to have to cap the upside. That's what I mean when I say banks are becoming regulated utilities.
I agree. And if there's one thing we've learned about bank investing in the last 15 or so years, it's you can look at the balance sheet all you want, but you'll never really know what's on there, right?
I used to audit banks, and right, in a way. And there's some really funky stuff. Like a bank analyst would be able to speak to this really well. Like if you are a bank analyst and you're, if you know that sector well, it is not transferable at all to any other stocks. The bank is different. Their balance sheets are very different, like you said, Spencer, because they have these huge, cash balances and customer payables, and they have these big, financial instrument balances, fair value tables. It gets funky out there, and I don't think the analysts can do it either, which is why the Silicon Valley Bank thing. It's like people knew about it, and it was in the numbers, but it wasn't reflected in the stock until the day before.
The day before.
Literally, everybody missed it. Yeah.
All right, I'm going to bring up the chart report right now. This is yesterday's edition, Pat. I guess we'll start with the chart of the day. This is what you were just saying, though, basically.
Yeah, pretty much just what we were saying there. 10-year just knocking on the door of a breakout of a nice, call it 1-year base. It's really like 10 months, but base within an uptrend. And I think the important thing to keep in mind is that this is part of a longer term breakout in rates. We saw a break of that, 30-year long-term trend line. And since then, it's just kind of paused for the last 10 months. The 10-year peaked in October, right around the time stocks bottomed, and then it's just been moving sideways. So here we are kind of knocking on the door, seeing if we're going to get that breakout. And what you really want to be looking for is how the sectors react, mostly growth, tech, things like that. So that's definitely going to be one this whole week to watch is the 10-year. This one I really liked. I'm glad you stopped on this one.
Yeah.
We all know we're kind of in a rocky time of the year seasonally. This is just a different look at that. They're looking at the average daily percentage moves. So another way to look at volatility. And you can see we kind of pick up. You can see that orange moving average kind of picks up over these next few weeks. Could get a little rocky, could get a little volatile. I mean, here we are. We're still in the lower end of the range if you look at something like the VIX. So
my biggest takeaway is how dead the end of the year is. Look at that.
Yeah, right.
End of the year is people that don't give a shit.
Yeah. I mean, we almost always get that nice little drift up into the end of the year. There was one year, I think it was 2018 where we just sold off into Christmas. I mean, I think it was Christmas Eve. We got like a massive sell-off. It was right near the lows, but we'd have to go back and look. But that was a dark Christmas. But other than that, you usually get that ramp up.
I gotta get Liz Ann Sunners on the show. She's great. I think her charts are among the best that I see on Twitter.
Yeah, and she's a go-to of mine. I mean, every day she must have some sort of process where she just goes through the charts and shares them because she always has something interesting on her feed. This one, earlier this year, a few months ago, we saw a pretty aggressive net short position S&P 500 futures, and we've seen that kind of unwind pretty significantly in the last few weeks. Although it looks like it's still negative, which is really interesting to me. I mean,
it is.
We've had a pretty strong year up until now, and even in the second half, things have been pretty. I mean, they haven't been bad, so pretty interesting to see it still negative like that.
We saw that Frank chart this morning, energy,
Nice.
which we've talked about. What else jumps out to me? Elisa Abramovich, she's good too. Yeah, we talked about that already. Yep. Yeah, all right. Good stuff here. Really great stuff, Pat. Hey, familiar face.
So I actually like this last one right under Steve's here. So this is from Scott Brown. But basically, he took the three largest stocks, Apple, Microsoft, and NVIDIA. Might be another one in there too. Oh, no. Yeah, and stacked them up against the sectors. You can see those three stocks would be way larger than any other sector. I
know what to say to this. You ready?
Yeah.
This won't end well. How'd I do?
You did great. You sounded like a lot of people on FinTwit.
Cool. Okay, good. Just checking. Yeah, that's my doomer impression.
You forgot to bring your analog chart though.
Oh yeah, right. All right, nice job on this, guys. If you want the chart report, it literally is a free daily note, and it goes out every single day. Pat does a really good job. The link to get the chart report is in the description of this video on YouTube, right where it says chart report. I'll throw a link up on the bottom of the screen there. There it is. And then if you are more of a QR code type of person, here is the QR code to get it. Just scan the code, use the link at the bottom, signup.thechartreport.com. And it goes out every single day. Pat does a great job with that. You don't have to spend all day on Twitter because Pat is doing it for you.
I do it for you.
Yeah, there you go. Plus Twitter melts your brain. So, okay. Enough of that. What else was it? Steve, wait, what is this chart you just dropped in there? What's that?
We were talking about healthcare, which is not a theme that we've really discussed much recently or at all. Since we've even started the show, there hasn't been much to say about healthcare. We threw up a chart of XLV, and Frank was kind of analyzing it for us during the guest segment. There's been nothing to say, right? It's been a range-bound market for 2 years, but beneath the surface, there have been some great opportunities and some terrible traps, right? Merck and Pfizer are two companies that you would expect to trade together. They're the two largest pharma companies, along with Johnson & Johnson in the world. Both Dow components. If you go back to the 2021, pivot highs and pivot lows in these companies, take it from like December of 21. Merck is up 50% in that time. Pfizer's down close to 50%, 43%.
Okay. So how much of this, though, is just Pfizer having that amazing 2020, 2021 run.
What are you talking about?
Well,
we all had amazing runs in 2020 and 2021. You want me to measure them out?
Yeah, but Pfizer had the vaccine. I mean, and maybe I can't. I don't know what their betas are on top of my head, but Pfizer seems to be the lower of the two, right? So maybe just Pfizer's returns were all just front loaded for 5 years or something like that.
So Pfizer is currently up about 35% from its COVID lows. Merck is currently up 75% from its COVID lows. So yeah, it looks closer when you do the math that way. And boy, it's been a lot easier to hold Merck than Pfizer, because with Pfizer you had like 100+% run up during the 2 COVID bull years, and then a huge, massive drawdown now, down 43% from those late 2021 highs. Listen, the point is simply that you have to be careful not to pick the wrong vehicle, right? I could throw up a chart of Lilly here instead of Merck. And
I was going to ask you to chart Lilly here.
Yeah.
That thing's gone parabolic.
I have another chart that I'm working on. It's not done yet, but I have Lilly and Medtronic, and I'm making the same point. Like, these companies, both huge mega caps in healthcare,
but they do different things though.
Opposite directions, right? I'm just talking about the index is sideways. It's gone nowhere, right? There's been absolutely no alpha there. There's been tremendous positive alpha and negative alpha in various components, and that's going to be the case pretty much always in healthcare, just because these subgroups are so very different. Some are very defensive, some are very much risk on, like biotech. You get big dispersion in performance beneath the surface. So it's just a point, something to be aware of. If we are talking about healthcare as a sector that we want to be rotating into, it's very important to pick the right vehicles to make that investment.
All right, real fast, let's do a recess, and then I have a couple of things I want to plug. If I can find my recess bumper. Where'd it go? And we lost our background. Okay, my recess is, even though I was like the first person I know to be bullish the Barbie movie, I haven't actually seen it yet, so I'm seeing it. I'm seeing it tonight.
Come on, man!
I'm seeing it tonight. It's been a whole thing. I've had to coordinate with other people. It's a pain in the butt, but I'm going tonight, so I'll have my Barbie review tomorrow. That's all I got.
Yeah. I would like to see it too, so I look forward to hearing.
Yep. Okay.
I'm still waiting to see Oppenheimer.
That's one you don't want to see that one on your couch. I think if you're not going to see it, fine. But if you're going to see it, go to the movies. Right?
We were going to see it while we were in Tokyo, but I was like, that might just be a little bit strange.
Subtitles.
Don't know if that would have been good.
What? Well, we decided against it. All right, can I give my recess?
Yeah.
So I'm very excited. On September 13th, you could throw up slide 1. On September 13th, Patrick and I leave for a trip to northern Vietnam.
Whoa, this is news for me.
Can't wait. It's going to be a blast. We'll probably hit like Hanoi, Ha Long Bay, some nice golf courses along the way. There's just so much to do up there. You could spend months exploring it. Point I would like to make is that I think we're good luck, and Vietnam will probably be happy for us to come back, because when we touched down in Asia, they were kind of looking at a reversal pattern. But look, we got 7 straight up weeks. Okay, Vietnamese country
correlation does not imply causation, Steve.
Vietnamese MSCI, the VanEck ETF VNM has not had a negative week, has not had a down week since we touched ground.
Wow,
in Asia. So let's try and keep the drive alive. Can we make it to September? We'll see.
That is quite a trend. You guys must have left just a wake of economic activity behind you.
I mean, we spread the word, and there's just been a relentless bid ever since. So,
yeah. All right.
Coincidence, maybe.
All right. Speaking, this is good that you brought this up though, because we hadn't mentioned for a while now why we sent the guys to Asia in the first place. We didn't do it for fun. We did it because we're making a documentary. Okay, we're making a documentary all about how people in Asia approach the markets, how they trade, how they invest, and how maybe we can borrow some ideas from them to help us make some money. So I'm going to throw the link up on the bottom of the screen now. There it is. It's wallstreettoallstreets.com. If you go to that link, you just sign up. That's how you're going to know when the documentary goes live. We're not going to mass release it at first. We're just going to release it to the people that sign up, and we're going to be hosting watch parties, tell stories that, footage that didn't make the final cut, do some Q&A. It's going to be a lot of fun. So check it out there. Their link is on the screen, and the trip, first off, wouldn't even have happened, by the way, without Centerpoint. They're the ones that helped us, get this thing off the ground. So huge shout out to Centerpoint. I have a special link for you. Where is my Centerpoint link? If you go to this link that I'm going to find for you now, and you open an account, you will get free trading for 60 days. Where's my damn link?
You know what? I'm actually opening a Centerpoint account today.
Really?
Yeah, I'm really excited to check it out.
Oh, there we go.
I met the two guys. They're nicest people ever.
I have a QR code. So here's my QR code. Scan that QR code, open an account, get free trading for 60 days. It's really what they're known for. They're known for really two things. I guess three things. Their customer service, their ridiculously comprehensive short locate lists, and their very advanced order routing. So if you're ever placed maybe market a limit order, say, and you watch the stock get to your price and you need to get filled for whatever reason, that doesn't happen here. No nonsense order routing, right? They're super advanced in that regard. So check it out. Centerpoint Securities. Okay. On that note, I think we're done for the day. What's coming up? We have Twitter Spaces with Pat and Strazza at 11:30.
Yeah.
And where's my schedule for the day? CRL, Chart Request Live, with JC and myself at 1 o'clock. And we are going to record and post a new episode of Part of the Price Action today sometime.
We should. It might be tomorrow, but you can also just catch last week's because we didn't tape it until Friday, so it's pretty fresh. Check out last week's. It's on YouTube now.
All right, that's a wrap. Thanks to our guest, Frank Cappelleri. Thanks to Patrick Donahuela. Thanks to all of you in the chat. Check out our website, guys. The URL's on the bottom of the screen there, stockmarketmedia.com. And see you guys later. Go make some money, I guess. How are we doing? Are we still green? What's the deal?
Tune in for Spaces at 11:30. We'll cover the interview.
Yeah. We'll check back in.
We are not. Why does it still green? We are not green. Okay.
Put it down, Spencer.
Never found average down. Have a great day, everyone in the chat. Catch you guys later.
Cheers.
See you tomorrow.
Run it. I can't take no loss. I don't even know what it costs.